Let's quickly get in a conversation on the read-through from Accenture's numbers and commentary that came in yesterday. Manik Taneja, Executive Director, IT Services at Axis Capital, is with us. Manik, good morning. Good to have you on the show. Different parts to it, right? While the quarterly performance that Accenture delivered was great, there are two things that I think people will think about. One, that they've lowered their full-year guidance. And two, they've also announced layoffs. I mean, 19,000 people laid off. So that kind of tells you maybe demand is not as robust as what they had previously thought. How would you interpret this?
Sure. First of all, thank you for having me on the show. So first of all, on that guidance change, I would say there is some element of demand moderation and some element of lower contribution from acquisitions. So the earlier guidance of 8 to 11% included about 250 bips of inorganic aid, while the revised guidance simply includes about 200 bips of inorganic aid.
We can hear you. Go on. Yeah, you're saying that that there are two parts to that guidance lowering, yes, including, of course, some delays in the deals. Yeah.
And the other thing that I would say is that managed services / outsourcing, which is the real comparable for Indian IT, over there has been no change in terms of the growth outlook. Still expect that business to grow in double digits, as per Accenture commentary yesterday. While the consulting piece is the one which is seeing a hit. So you would see that last 3 quarters in a row, managed services / outsourcing has outgrown consulting. And even from a full year FY23 outlook, earlier the expectation was that consulting would grow in mid to high single digit. Now the expectation is that consulting grows only in mid single digit. So that's from a guidance point. The second question that you had was with regards to the headcount rationalization that Accenture plans to do over the next 18 months. I would say this is par for the course, and one will not be surprised to see similar optimization actions being undertaken by the industry. To just put things in context, in FY22, the top 6 or the Twitch companies added almost 3.2 lakh employees, which was higher than the cumulative employee addition that the sector did between FY22.
Manik, I'm so sorry to interrupt because we're running into market opening. Just a quick 30 seconds. Is there any read-through for listed Indian IT companies? Is there any reason to get worried and think that maybe there could be a bit of a top-line slowdown here? Any read-through for Indian listed IT?
Certainly what's been happening over the last couple of weeks will drag the sentiment in terms of even customer decision-making. But I would say the current results will not be a negative read-through for Indian companies. And given the weakness in these names, one will expect some positive reaction to the results.
Not just the current results, I wanted to know if you heard from Accenture on the conference call about the global banking turmoil. What do you think they were talking about with regards to this? And secondly, Indian IT companies, have you had any conversations with them as this crisis was unfolding? What are their thoughts from a 2, 3, 4 quarter perspective?
No, certainly, as you said, with whatever news flow that's emerging from the banking industry, it does potentially increase the risk of some caution, some sort of a standstill in terms of customer decision making, and which always tends to essentially work to the disadvantage of Indian IT. As such, our channel checks all through the last few months essentially seem to suggest that businesses globally are preparing for cost optimization and doing more work out of India, and which should work to the advantage of Indian IT as such.
Manik, thank you very much. Good speaking with you. Appreciate you joining in with that perspective. There's about 30 seconds to go, a little more than that for market opening. So we'll stick with, of course, as prices as they start to come through. I mean, there are 3 or 4 clear categories of stocks where I think IT, of course, is one, as Manik just pointed out at the back of the Accenture numbers. There are asset management companies which get hit because of, I guess, debt schemes will see far lesser inflows post the 1st of April. Banks, I mean, we'll need to